Welcome back to the Florida Real Estate Investing Masterclass. In Module 1, we talked about the big picture. What kinds of properties you can invest in and what realistic expectations look like. In this session, we're zooming in on Florida itself, the market structure, local and regional differences, population trends, and what's shaping demand right now and for the years ahead. The time we're done, you'll know exactly how to identify where to focus your research and why some areas grow faster than others. Part 1. What makes Florida's market unique Florida is unlike almost any other U.S. real estate market because it's built on a mix of steady population growth, tourism, and limited land supply near the coast. Even when other states slow down, Florida often stays active because more than 1,000 new residents move here daily. Tourism continuously feeds short-term rental demand. Development regulations in coastal and conservation areas restrain housing supply. These long-term fundamentals create a base level of buyer activity that keeps prices resilient and gives investors options across dozens of niches. The state is also extremely diverse economically and demographically. While you've got metro areas geared toward finance, tech, and logistics like Miami and Jacksonville, but also retirement centers, resort areas, and rural land markets inland. That diversity helps stabilize the broader real estate cycle. Part 2. Regional market breakdown. To get the most from this market, you have to think regionally. Florida isn't one market, but 5 major regions. 1. South Florida, Miami, Dade, Broward, Palm Beach. This region is global, drawing international buyers, snowbirds, and investors year-round. High entry prices, but strong rental demand and appreciation. Ideal for luxury, STRs, and pre-construction condos. Risk factors, insurance costs, flooding, and intense competition. 2. Central Florida, Orlando, Polk, Orange, Osceola counties, the state's fastest growing population corridor, driven by job growth in tourism, logistics, and tech. Affordable suburban housing is still accessible, and rental yields are healthy. Investors love it for its balance of price and demand. 3. Southwest Florida, Fort Myers, Cape Coral, Naples, incredibly popular with retirees and snowbirds. The land market here has been booming for years with infill lots reselling quickly. Watch for hurricane risk zones and building permit backlogs that can delay new construction. 4. Northeast Florida, Jacksonville, St. Augustine, Clay County. More steady, moderate growth with affordable single-family homes and expanding industry. Excellent for long-term rentals and new construction build-to-rent projects. 5. Panhandle and Gulf Coast, Pensacola, Panama City, Destin military, tourism, and beach rental economies. Lower entry prices, strong vacation rental potential, and consistent appreciation, though smaller market sizes limit liquidity at times. When you compare these regions, keep 3 words in mind: growth, affordability, and resilience. You want areas where people are moving to, prices are still reasonable, and local economies can hold steady even during downturns. Part 3. Population and demographic trends. Florida's population continues to rise, now surpassing 23 million residents. Most newcomers arrive from high-cost states like New York, New Jersey, and California. That movement brings an influx of cash buyers, higher housing demand, and increasing pressure on the local rental markets. Key trends to track: retiree migration into Gulf Coast and Central Florida communities. Young family relocation to suburban counties with lower property taxes. Work from anywhere, professionals renting or buying mid-range homes near lifestyle amenities. Each of these demographic groups drives a different investment opportunity: senior housing, single-family rentals, or short-term vacation units. Part 4. Economic drivers and infrastructure. Real estate values don't rise in isolation. They rise because industries expand around them. Florida's biggest job engines are tourism, healthcare, construction, logistics, and finance. Major infrastructure upgrades, tollway extensions, port expansions, airport improvements are constantly opening new areas for growth. In Orlando, the new Brightline rail extension connects South Florida's economic centers to Central Florida, increasing accessibility and pushing up land values along the route. In Tampa Bay, industrial logistics projects around I-75 have turned once quiet farmland into active investment corridors. For investors, this means two things. One, follow infrastructure projects. They predict appreciation. Two, buy ahead of development rather than chasing it. Part 5, market cycles and timing. All real estate markets move in cycles: expansion, peak, contraction, and recovery. Florida's cycles tend to recover faster because population inflow cushions demand. That said, not every region peaks at the same time. When flipping or speculating, timing matters, but if you're buying for cash flow or long-term appreciation, your entry price and due diligence matter more than trying to predict exact timing. A helpful tip: compare median sale prices and average days on market over time to gauge where a region sits in its cycle. When inventory is climbing and prices flatten, buyers have leverage. When inventory falls, sellers rule. Part 6. External factors: insurance, regulations, and climate. Florida's growth comes with unique challenges investors must respect. Insurance premiums have risen dramatically in coastal areas. Flood zone designations and elevation certificates influence value. Local ordinances govern short-term rental operations and building density. Staying informed with local county data and FEMA maps protects you from unpleasant surprises. Knowledge really is your insurance policy here. Part 7, tools and research sources. Let's get practical. Here are some research tools every Florida investor should know. FloridaParcelMaps.com or county GIS sites for parcel and zoning checks. Zillow, Redfin, and Realtor.com for comps and market stats. Florida Department of Economic O reports. Fortunity, DEO for population and employment. FEMA Flood Map Service for flood risk assessments. Spend time learning these platforms. They're free and incredibly powerful. In later modules, I'll show you how to combine this data to spot undervalued areas before they trend. Part 8, putting it all together. Let's summarize the key takeaways from this lesson. Florida's market thrives because of sustained population growth and economic diversity. Each region has distinct strengths. Study them individually. Infrastructure and demographic shifts are your best early indicators of future appreciation. Smart investors balance opportunity with awareness of local risks. Remember, the goal isn't to chase hype, it's to understand where sustainable growth is happening and position yourself early. That's how professional investors consistently succeed here. Part 9, transition to next module. Great work. You now have a solid grasp of how Florida's real estate market operates and what makes each region tick. In the next module, we'll drill down into the legal side of investing here: property rights, title searches, taxes, and the closing process. Everything you need to protect your capital and avoid costly mistakes. Thanks for watching, and I'll see you in Module 3.